Good morning, this is Connor from 500 Edge, where we trade SPX 0DTE options. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters today ahead of the opening bell. The month of May has come to an end, a green month and another green week for the SPX, marking 9 consecutive weekly gains in a row. For our 0DTE portfolio, which started on the 11th of May, we took a total of 38 trades, 28 winners, 10 losers, for a win rate of 74% and a total return of 26.48%, risking no more than 1% per trade. Friday's session was a little more volatile, but this was expected due to month-end flows and that rotation trade, selling underperformers and buying really the one outperformer, which was technology, which gained 2.2%. SPX closing positive 0.2% to 75.80. We highlighted two major levels in our Friday report. 75.69, which was the previous session's high, a break implying continuation of the uptrend, or a move into our upside target and upper bound, the 7600 call wall. Both these levels held firm, and we just basically chopped between them throughout the session. Good setups for the bulls, buying the dip, and we were favoring the dip buy, but of course some nice shorts here, particularly in the early morning off 7600, but very hard to go wrong. Bulls and bears made money. For today, starting on the 15-minute time frame, the trend remains bullish with the 20 EMA in green above the 40 EMA in red. We have the previous session's high at 7600, so a break implies continuation of this trend. I question upside magnitude beyond 7600. It remains the SPX call wall. However, it is also the absolute gamma strike, so it does lose some reliability as that upper bound. The SPY call wall is just overhead at 7615. We have 7625, 7640, and then 7650, which is a call wall candidate, and we'll highlight things here in a sec when we look at the gamma charts. So there's a lot of supply overhead. In terms of the downside, key levels to focus on is that previous session's low at 75.63, the SPX and SPY flip at 75.55, so a break below. Supportive flows are going to thin out, and we would start to expect more directional volatility. Below that, we have 75.30, 75.25, which was the upper bound here early last week before we broke out to that call wall. And then below that, we have the big 7,500 strike. Transitioning over to our dashboard, total gamma exposure for the SPX remains positive, 1.2 billion notional, trading above our transitional level of 75.55. As you can see, above, all strikes are positive. That is supportive for the market price. Below, most strikes are negative. That is destabilizing for the market price. 7600 remains the call wall. This is defined by the strike with the highest total call gamma. 7600 is also the absolute gamma strike, which is defined by the strike with the highest total gamma calls plus puts, which means this could be more of a sticky fair value strike than hard resistance. We'll see how price behaves around there. If we can break and hold, it opens the door to, as I said, a lot of supply overhead, but that 7650 handle is a potential call wall candidate. And as you can see here, the variance between 7600 and 7650 is minimal. So if we break, we close above. A good chance 7650, potentially even 7700 becomes that call wall. Depends what type of option flows come into the market here starting the new month. For the SPY, the flip is 754, which is SPX 75.55 equivalent. So the SPX and SPY flip share the same strike. The call wall 760, which is SPX 7615. So there's a big resistance level just beyond that 7600 handle. So we really want to look towards our 0DTE feed today, see where that max call is in relation to that 7600 handle. Volatility is becoming more interesting with the VIX back to the open interest lower bound of 15. So owning some VIX calls here for the end of June or July starts to make sense. However, just because you're at the lower bound doesn't mean volatility is going to spike. VIX can remain at that lower bound for an extended period of time while SPX continues to drift higher. But you don't have to worry too much about those calls going too far out of the money. Volatility will never go to zero. So if anything, you'll probably just base around here at the 15 handle. And if you do get some sort of catalyst, you could very well see a 10% spike in the VIX in one trading session, particularly given the fact that a lot of participants remain unhedged. Now, if we go to the SPX chart here, in terms of the implied move, also very low today, this week, a sign that the market is perhaps becoming a little bit complacent. So we have a 0.5% move priced in today. That is an implied high of 76.20 and an implied low of 75.44. For the week, I believe it is 1.2%. That is an implied high of 76.73 and an implied low of 74.91. On the calendar today, we have ISM manufacturing, which is due out at 10 o'clock. This is a high impact event, often sparks volatility. So just be aware of this if you're positioning in the first 30 minutes. We want to keep that news feed up. Headline risk remains high, and XLK semis remain of focus here for directional skew.